Hello, ladies and gentlemen. Welcome back to the X-Force Global channel. Thank you very much for joining. Hope everyone had a great week, or at least having a great weekend. Today, we're going to be talking about Sol or Solana's price action and see where we stand on both the macro and shorter time frames, and what we can expect for the eventual continuation of a possible bullish or even the alternative bearish continuation. But we do have a lot of pros and cons for both of them, and we must not follow the trend, which is currently the bullish scenario. So that is kind of our primary focus for the time being, as that is the current trend. Now, Solana is interesting because it's one of those few coins that has actually gone from hero to zero, and zero to hero, essentially one of the first to spark the bull market that we're currently in, at least for the altcoin markets. So for this bullish scenario, this is currently how I'm counting it, and we have a cycle wave 1, 2 that is now complete and working for this possible extended wave 3 of the cycle degree that is possibly leading us into a much higher level until proven otherwise, which is our alternative bear scenario. Now, not only does the log chart show us some good potential signs, but so does the linear chart. So if we look at the linear chart, we can see a pretty strong accumulative range for what it is. I mean, especially within a short amount of time, we still haven't had that explosive outgrowth that we've had for a lot of these other coins. So if we go back to the logarithmic chart, we can see that we have a pretty good structuralized, possibly potentially leading us into higher levels, maybe up until even the $700 or $1,000 levels per Solana as a kind of conservative target. Of course, we won't know, and we don't really want to assume the highest degree of the cycle degree and how far these cycle degrees will go until we get that parabolic run. Now, if we look at the current correction that we had, or that past correction we had, in hindsight, it does look like it's a possible WXYXZ, but just simply put, we can also label this as some kind of double zigzag going into an ABC into a W, X wave, and then we have another ABC where A wave was extended, and that's the only way I can currently count it. But nevertheless, the market inefficiencies have told us that this was some kind of strong bottom, because we did have a strong rebound of a 2000%, and without a doubt, that is giving us signs that some kind of bullish momentum is continuing, and overall market sentiment right now, as you can tell, is currently in a bull run. So how can we note to ourselves, or how can we assume to ourselves that this bull market is going to be continuing? Well, that is where the Elliott wave theory comes in, and a little bit of channeling technique, or Elliott channeling technique, is going to help us give us some kind of idea on whether this is going to be continuing or not. Now, we do have a possible 1, 2, 3, 4, or wave 4 being completed, and wave 5 is now underway for a larger primary one, as we don't want to say that this is a cycle 3 because it would be too short in time. So we're going to assume that this extension is going to be continuing. Now, if you don't know what Elliott channeling technique is, it's very simple. Basically, Elliott noted that parallel channels, or parallel trend channels, typically they help mark the upper and lower boundaries of impulse waves by using these parallel channels instead of normal horizontal or vertical support and resistances. So you often work with them, and they give you a very good precision in terms of where the possible wave 3s or the impulses are going to end, and where possible supports are going to be for wave 4s. So you draw them in advance, essentially using these parallel channels to assist you in determining these wave targets and provide you clues to the future development of these trends. And that's what we have here going on. Pretty nice. And I would say Solana is one of the better and best examples of this, where they were sticking to some kind of parallel channeling and we're going up for higher levels. So it's another way to project price where other support and resistances cannot provide. And this is similar to the idea of using fib extension and the fib extension tool, as opposed to the normal fib retracement tool, because it gives you a price projection rather than giving us a perfect spot of where to do it. So it's more of an assumption than giving you exact pinpoints of where, but it still gives you a more trajectory and keeping you within a narrative of either a bull or a bear trend. Now, the initial channeling technique for an impulse requires at least 3 reference points. We need it via wave 1, 2, and where we're going to be projecting for a wave 3 or the continuation of a wave 3. Now, wave 3 ending, that connects the point. What you have to do is connect the points labeled from waves 1 and 3, and also the points of label 2. This then provides you an estimated trajectory for a possible wave 4 pullback and so forth. So to keep it short and simple, it simply gives you the confirmations by using points waves 1 and 2 in various ways, whether you're in the higher or the lower degree, and with each breakout you can confirm whether you are in the works for a possible extension of a wave 3, and via the readjustments of these channels they'll usually have some sort of price reaction, most notably for the wave 3 at the top of the channel. So as you can see here, we have various channels that sort of give you the or that sort of gives us both in hindsight and at the time of trading when our waves 1 and 2 were being created. As the trend is being created, the mirror adjustment of these parallel channels were to be noted, and that is what we have currently for a possible wave 3 at the top, and we're working for that corrective wave 4 of either the intermediate degree wave 4 being completed here or wave 4 here. So we have two channels here. We have one channel, originally it was very simple because we took it from the bottom or the origin of wave 1 and wave 2. This breakout here was a clear confirmation that this continuation was going to be happening, and all we had to do is readjust this channel for this possible top of wave 3 to wave 1 and wave 2 for those reference points as I have mentioned. Now, as you can see here, we're now retesting this immediate parallel channel. Now, this can be the immediate support, whether this wave 5 is going to be continuing, or if we're assuming that this is the top of wave 3, which it clearly looks like it because we had a pretty strong pullback of around 40%, we can just take it from the origin of this intermediate degree in wave 2, extend these parallel channels, and that can be our assumed wave 3. So we have two immediate supports that still gives us a relatively strong trend that we're in, regardless of a pullback back into the $100 regions, because if we assume that this immediate channel is going to break, we can assume that we're going to be in a larger corrective move, not much downside from these levels anyways, right? So if that's going to be happening, a possible 50% in total is what we're going to be expecting, and maybe we'll see whether we do an undershoot of some sort of for this wave 4, we can still continue to the upside for a possible wave 5 continuation. Now, what does this mean? We either are in this immediate channel and we're getting supported for this wave 4 because we do have a possible ABC coming into this wave 4. Now, if wave 4 is assumed complete, all we have to do is assume that this wave 5 is going to be continuing. Now, that is where the trader has to do the risk management themselves, and the mitigation in itself is just based on this immediate parallel channel. Now, if we do assume that it's going to be breaking and we're going to be in a larger corrective structure, because these ABCs could turn into something different, whether it's a flat, whether we can be turning into a triangle, or whether we're going for a double corrective zone for this wave 4 as a WXY, then we can assume that this wave 4 channel is going to be supported by this channel, and we're going to continue for that fifth wave. So either way, however we want to label this as either a flat or whether we're going to see this as a double corrective zone, it's all going to be based on that combination of Fibonacci levels as well, just depending on how strong we get supported at these golden Fibonacci zones. And that all together comes in combination with how these supportive zones are going to come into play. But either way, on a macro perspective, I wouldn't be sweating too much until we actually break the $100 levels, possibly just a little bit, with a margin of error or so. And then if we continue up, then that's going to be our confirmation. So it is okay to be scared, and it's okay to start thinking about what kind of risk management approaches you need to be taking. But nevertheless, this overall channeling technique is giving us the idea that wave 3 is in, and we're working for a wave 4, and we need that one last wave 5 to the upside, which assumed is going to be breaking this all-time high. And then we should come back for another larger wave 1, 2 of the higher degree, and then we continue on whether this cycle 3 is going to be continuing to the upside. So that is kind of the risk idea approach for how the Solana is going to be continuing its bull run. I think it's looking very bullish. It's not financial advice, but still it does look like a clear continuation to the upside due to that 2,000% bounce. Now again, this does look a little bit difficult to count, but either way, for the bearish count, we still have to count it as a three-way move down. So how are we going to do that? How are we going to get the bearish continuation? Well, this move, relatively still intact, is going to be still giving us the same idea of a count, but going into a larger A wave. And the only way that we can say that is we're going to be continuing for a bear market, in my opinion, is either as a flat where we have an A, B, C, or we didn't reach that zone and just say that we're going down for the move to the downside now, but that's not looking likely at the time of recording. So instead of labeling this actionary wave into a wave 1, we can alternatively label this as a wave A, wave B, and a highly extended wave C that keeps that impulse intact as well, where we're assuming that we're going still for one more move to the upside, possibly into that Fibonacci zone of the 1236 and 1382 for that flat scenario. And then we go for that larger B wave and then continue down for a larger wave C, which also fits pretty nicely when you look at the larger time frames when you have the actual price history. So if we go back to Binance's chart, we can see that we had a clear 5-way move up, and we can assume that this was a wave 1. Either wave 2 is now being in the making, or wave 2 is going to be completed. Now, again, from a macro perspective, it's very difficult. We just have to work with what we have on the medium time frames and shorter time frames and see how that's going to be building up that narrative for whether that wave 2 is going to be complete or wave 2 is still pending to be complete. From a risk manager perspective, at least with the hybrid scenario, that you can expect one more move to the upside, and then from a risk management perspective, you can just essentially come out as a conservative target, which still gives you around 150 to 200% range to work with before we can assume whether we're coming back down or not. So essentially, what you would like to do from a strategy perspective is, of course, depending on where your positioning is, if you're down in here, you have a little bit more room to confirm whether this wave 2 is still being made. But if you're in these regions here, or possibly taking these longs from here, it's probably best to, of course, take some risk management off of your checklist and say that this is going to be a good spot where a lot more profit taking is going to be taking place, and what kind of other momentum indicators are telling us. Basically, the RSI has topped for this wave 3, assuming that this is the wave 3, and usually the peak RSI is going to be where wave 3 is going to be ending anyways. We should be expecting some kind of divergence to be playing out if this wave 4 was going to, or wave 5 was going to be playing out. And then we can have a larger pullback of a wave 1, 2, see how this level holds, and see if that continuation for cycle wave 3 is going to be happening or not. So, of course, this is a level of high interest of profit taking because we do have that risk or that possibility of coming down for a larger wave 2. There was a lot of times where, for example, if we look at Litecoin, Litecoin has shown that similar type of idea where it looked like it was going for a continuation to the upside, where it did break the all-time high. And just based on my risk management strategy that I just mentioned, that would have been a good time to get out. And even with this pullback, at least you could have still gotten out on this bounce because we had a 3-way move up that was giving us a signal that maybe we're working on a larger 1-2 already. So that is the essential idea for this same idea as well, because this essentially at this time of trading, this looked like a larger 1-2, possibly working for a larger wave 3, where wave 1-2 could have also ended here. But instead, Litecoin did the opposite and started a range, came back all the way down, and that is where the bear market actually continued. So same idea for Solana. What you want to be doing is, even though we do have the perfect idea of a channeling, we do have the essential setups for everything, we still want to be very cautious and take a risk management approach on where this is going to be. So we want to take the hybrid approach of possibly longing these regions, but we also want to be careful. Even though there's a possibility of a continuation, we just want to be a little bit we want to stay on earth. We don't want to continue and say that the bull market's going to go on forever. We want to say that this level is a good zone to possibly take profits, no matter bearish or bullish. So again, short term, it looks like we're going to be looking for this continuation for some kind of wave 5 as the highest probability on the shorter time frames. Now, if we pull up the more local time frames, it's very difficult to say because this 3-way move could mark the end of that wave 4, like I said, via that that intermediate parallel channel. That could be the ABC continuation, but ABCs are either the end or the beginning of something as well, and that's where we have to kind of say whether this ABC is going to be connecting us into a larger WXY of some sort that can bring us into that larger intermediate support of that parallel channel, or whether this is turning into some kind of flat idea is also another possibility. Because our wave 2 was quite extended in time, this still gives us leeway for a possible flat correction, and that gives us a possibility of working in a larger ABC flat, depending on how this is going to be corrective. So we can even say that this is turning into a larger ABC, still giving us the same idea of targets going into this wave 4. So if this wave 4 is still working as a flat, all we have to do, if we're going to assume that this is going to be up, again, that's the hybrid idea. Even as a flat, this could also mitigate that idea that we're finishing a wave 4 in these regions, or wave 5 in these regions, if this is a wave 4. And if we're working in a flat, it's still giving us some potential upside targets, depending on how you're looking at this, if this is an impulse or a 3-wave. And between those 5s and 3s, a 5-wave being the motive wave impulse and the 3 being the corrective reactionary waves, all we have to do is assume whether this is going to be developing in some kind of 3-wave, or whether it's going to be cut short at these major Fibonacci levels for that double corrective zone coming into that wave 4. So you can see all of these ideas or these zones are still eventually the eventual targets, right? It just depends on how the follow-up is going to be, whether impulsive, whether wave 4 is going to end here, still gives us that upside target, or as a flat, we can still assume that this is going to be some kind of 3-wave move. Maybe this is working for a 3-wave move to the upside, where we continue as an impulse, and that creates that B wave. And then we can assume, okay, at least we still got the upside target, assuming that was a wave 5. And let's say we get that some kind of rejection of these levels, then we can assume that this is going to be the next immediate support for a possible flat idea. And that is how you have to take into the consideration for that. But for now, as long as all of the hybrid scenarios are intact, we can still assume some kind of immediate reactionary zone is going to be happening within these regions, whether we reject as that double WXY, double zigzag scenario. We can get an idea whether how these Fibonacci levels are going to be supporting us or rejecting us. And if we get a strong breakout, we can continue the idea. If either this is going to be a 1, 2, 3, 4, 5 into that 5th wave, possible flat, and that is how our zone and that conservative idea of taking profits is going to be very, very key as we continue build this narrative. So it all boils down to whether you are positioned or not, and whether your position in these levels here is going to be completely different a risk management approach, as you have more room for a possible wave 4 pullback before actually working in stop losses around these regions here. So I think we're going to do a lot more consolidation. I think even if we do come back up, we will get some kind of rejection for a wave 1 of the primary degree and come back down. So all of these scenarios eventually show us coming down for a pullback. And that is why the risk management approach to this, and that's why I'm telling you guys, there's still good potential upside for this possible wave 4 being complete or being in the making for this possible wave 5. So as long as we get supported on those larger parallel channels and get supported on major Fibonacci levels, that is kind of the way to take this approach, take those profits accordingly, and then see how the more larger pullback is going to be happening, whether that's going to be developing into a larger bear market or not. Either way, we still have very good opportunities on the shorter and to the medium time frames. We'll take those step by step, but the overall picture with what we have right now, overall is the key word here, ladies and gentlemen, is that we're still working in the possible parallel channeling technique, and that is kind of what we are essentially looking for in terms of where we can be looking for potential support and resistances. Okay, so that's kind of how I'm going to end this stream. And again, we have that larger ABC possibility of a 1-2, just like I said in that case study for that Litecoin example, where we hit all-time high just barely, came into that expanded zone, and then we went for another bear market continuation, or we just continue on for that larger parallel channel. Let's see if I can pull it up. Where are you at? Okay. Yeah, so that's how I'm gonna end the video here. Hope I'm gonna also talk about Ethereum in our next analysis. Hopefully that was helpful. If you're interested in joining the membership or Discord membership, please join us. Please don't hesitate to contact me. The link is in the description below. If you're not following me on social media already, on X, or formerly known as Twitter at XForce Global, please do give me a follow, as I do give more daily updates on there. Thank you very much. See you guys in the next video. Bye bye.